Hello, traders. Thanks for joining me this morning, and happy Friday. It is non-farm payroll today. Non-farm payroll Friday. It is 8:01 a.m. Chicago time on June 4th, 2021. This is episode number 2005, and let's start out with you telling me if I'm coming across loud and clear. Yesterday, after the broadcast, I heard that I was told that the sound was very low. It is impossible to get Windows to just stick with good sound settings. So let me know how that works. Let's see. I want to remind you that derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's jump right in and take a look at the Convergent Trading pre-market summary sheet. We had the non-farm payroll release in case you were sleeping. The non-farm payrolls came out at 559,000. Expected at 674 this morning. The prior was 266. The dollar weakened slightly. We saw relatively decent volatility across the board. We saw the treasuries spike higher and come right back to where they were generally. Well, it was so for the bonds, not the notes. The notes are still trading higher. Gold popped higher, crude popped higher, and so did the indices. Other than that, what's driving us other than non-farm payroll release is the U.S. infrastructure deal. A lot of politicking and wrangling in Washington between U.S. President Biden and the Republican side of the Senate, I believe. On this big infrastructure package. The market's anticipating that. And the wider distribution of vaccines, Pfizer got approved by the UK for 12 to 15-year-olds or something like that to start taking the Pfizer vaccine. And then today we have mild risk on. We've been in a balanced sideways profile or market throughout the session. On the S&Ps, and we broke higher on the non-farm payrolls. So it's mild risk on. We see on the sheet in front of us here that the indices are mostly positive. The Euro Stocks and the DAX are dragging. The Euro Stocks 50 is down a point. The only thing down on my quote board, the quote board that I use to monitor futures, the only thing that's down is the US dollar, down 32.5 cents. The leader is silver. Silver up now 1.32%, up 35.5 cents. Crude oil up 0.96%, up 66 cents at 69.47 crude. Again, hugging that 70 figure. And then looking ahead, we have U.S. factory orders at 10 Eastern. And then we have the U.S. total vehicle sales for May at 7 p.m. today. The market, the S&P has traded 237,000 contracts so far and showing a multi-distribution profile with a clear low-volume node. We'll go over that in a minute. Overnight inventory at 17%. Let's see if that has shifted at all. It's at 24% currently. Overnight inventory 24%. The range still at 33.25 points. 33.25 points. Pretty normal range over the last 252 days. And again, the volume at 237,000, which is again relatively normal. So that's where we stand with the summary. Crypto's taking a bit of a hit on Elon Musk. I think he posted something like a meme or a tweet that said Bitcoin and a broken heart or bye-bye Bitcoin or something like that, and caused that market to react. It's amazing that one person has that much power over so many traders. But that's where we stand today. Looking at yesterday's anticipated action, our plan for yesterday, the expectation yesterday, the primary expectation is we knew we were coming in out of balance, and the expectation is that we would likely make a move on the open. And the anticipated move was a push to 04, a push to 04. First, test 95, fail at 95, fail to push 95, pull back and push to 04. The expectation is the market is likely to rise back into balance. So yesterday's trading was imbalance into balance on the primary scenario. This is what we would expect the market to do, especially in with the 85 to 80 area beneath us. This big bulky volume area right in here. Right in here, you see this high volume. We've talked about this area a lot in the past. The secondary scenario is a small attempt at pushing higher, likely to run into, likely to get tangled at the 88, the full session VWAP. This what I was talking about yesterday is look for failure to squeeze into that 88, 89 area, 90 area. On the outside, 95, but put a circle around this right here, this VWAP, and so on. There's some confluence here. Looking for it to squeeze in there, and then I was looking for the short, the impulse down, and the impulse down would likely take us into the overnight low at 69.50 and 65. The extended target is 55 below, 55 as outlined here. Here's what actually happened. Let's jump into our review segment. This is what actually happened. The market pushed very nicely into the 64. Oh, that's interesting. The market pushed very cleanly up to 41.84 and a half, came back to 79.75. I marked that as the opening swing, and then it came back above the open and what ended up being OAOR, opening type open auction. And we know with open auctions we got to be careful with breakout trades. And then what it did is it would break, consolidate. By the time I could do anything about it, it was I believe right down here. Right down here is the trade short setup I posted in Convergent Trading's head trader channel, and then I was looking for a push into 65, if you recall, 65. This is a stock zone, but I was really hoping for a 55 test that brings us into the balance going back all the way to the 2nd of April to the present. That would be the big balance area. But 65, I posted an image about this again in the Head Trader channel on Convergent, that there's a fair amount going on in this area, and to be cautious on the 65, and it immediately reversed and pushed higher. Here's the image I posted. Let's see if I can get this over here for you. This is what I posted in the Head Trader channel yesterday as the market was pushing in right here. It was trading at 69.50 or so. There's quite a bit that has happened, that has occurred at the 65, hence the stock zone that it is, and the potential for it to bounce from here. So we came down at the 65. It looked like classic seller dry up. And then it ended up taking out the stop at 75, above 75 here at the mid for the RTH session. And then it just became choppy. A nice pullback to mid here at 75. Iceberg buyer at the 75, to burst through and give us the IB stat. The IB stat, for those of you who don't know, The IB is the first hour's high and low of the pit session, and the IB stat over the last 700 and something sessions, about 3 years. What the IB stat says that there's a historical probability of around 97, 98% that either the IB high or the IB low would be breached, is breached at some point during the session. So we start to aim for that. Same for the overnight stat. So on the pullback to 75, we're looking for a break of the IB high, week high at 84. Week high at 84, and that was the next big opportunity, and this would target 95, if you recall, 95. And then at that time, what we got is a President Biden compromise on capital gains to get the infrastructure bill passed, and so it happened very quickly. We ended up getting a 25-point push. And what did that 25-point push do? It got us into range of the 04. So let's go back to the summary sheet here. And what's our target is the 04, the MC point of control circled here. And that would bring us back into balance. And basically we pushed into 0250. We couldn't quite get to the 04, but what we did is we cleanly rejected prices below 85. This was a test lower that failed to hold lower prices, and then from there it just kind of went down the crapper and became an outside-in trade, a rotational trade, and overall you can see the rotations here quite equal, with the delta being negative for the session. This looked weak to me on the close. This test and retest of 88, and I anticipated a test, and I posted this again in the Convergent Trading chat room last night when I was sharing my homework. I posted that I expect that the market is likely to test it's 84. So I said ES had good volume and range today. Imbalance from the overnight session has done a good job of returning above the big high volume node at 80 to 85 today. Didn't quite get to 4204 and remained below it. The sequence of lower highs into the close shows that it's simply exhausted buyers on the run up back to 4204. During the day session, likely to push back to 84.83 overnight to test that support. And that support that I'm referring to is right here. And that, what I'm demonstrating here is that's the auction. This is why we talk about this stuff. The auction kind of pushes until it finds the opposing force, goes to the other side, pushes to the other side as far as it could. Normally, it pushes back to the prior balance or the prior value. Then it might accept it and go sideways, or it might fail from it and go stick around in the middle. And understanding this rotational nature and knowing which areas are important, which areas are rejected, helps us develop a plan throughout the day, develop a bias throughout the day, and most importantly, it helps us when we put on a trade to just be confident holding on to that trade, always knowing that the outcome is 50-50, and there's nobody out there, doesn't matter how much money you pay them, there's nobody out there that can predict what the market can do. There are too many participants, and only one has to disagree with you or push the market in the direction to trigger a move. So understanding the push-pull nature of the market is very important. This brings us into the overnight session here. The SOC, or the scene of the crime for the non-farm payroll release from about 45 minutes ago, is 4194.50. This is the point where the auction got interrupted by the non-farm payroll release. Before that, the auction was interrupted slightly by Fed Chair Powell's comments about employment. and President Biden is expected to speak about the employment numbers, I think at 10 Eastern. If I don't remember, don't quote me on that. I think it's 10 Eastern today. He's expected to speak about employment and what the federal government's doing about it. But the NFP SOC is 4194.50. This area is marked, and we're looking for a market to check, for the market to eventually check this price. And what we ended up leaving behind is this low volume area. And so we have this zone here from 4,200 to 4197, 4,200 to 4197. That is an over-under area. So we want to see today how well the market responds to that area. If it comes back, if it comes back to this area, which by the way was acceptance the day before, it was the point of control was 4196.50, the prior point of control. 4196.50. If it's not able to hold on to 4196.50, bad news for longs, likely to push into 4185 again and potentially below. So this morning we're out of balance a little bit on the day, but we are in balance. We are in balance on the overall picture, which takes us back to the composite, the all-important composite chart. You're probably sick of watching me bring this up and ramble about it, but this is what's telling the story. Look at that point of control right there. Look at the point of control so far this week. The 3 days that we've traded this week, we just love this area, 4204 to 4200. Love this area. It is the cat's meow. It is the thing to have. And we are just above it, 4208.50. So this morning, if we pull back and we don't hold the 04, the 200, then we're likely to slip through to 96.50, 97. And if we don't hold that, we're likely to push through to this morning's overnight point of control and to the other side, which is 85. We have some single prints down there. But yesterday, if you look, tested down into 65 and rejected. This is the 20 period SMA, the 20 pit session, simple moving average. It tested. We see rejection down here, and the market's exploring the other side. What is threatened? 4230 is now threatened by this. And so what we want to see this morning is, hey, do we hold on? Do we hold on to this 4,200 on a retest? Do we continue higher? Because if we continue higher and we'll push through this 1550, which we failed at on Wednesday, we failed to take out the 1550 high of the prior week. We stopped at 15 even. And if we push above there, it's a quick run to 25. And then from there, 30, 32, 38 quarter, right? That's the story, and I'm sticking to it. So let's move on to what's expected for the day. I would show you the heat map this morning, except that it doesn't have anything fruitful to talk about. I'm looking at the heat map now. It's redrawing for some reason. And it's really not providing any real insight here as to what's what. So there's no point spending time on that. Let's jump right into the expectations for today. We're not doing the where are you hailing from thing this Friday. It's every other Friday. But I do want to invite you to check out edgeclear.com. This is a brokerage I launched with a fantastic group of brokers, Max Timmons, Ian Blanky, and others about a year and a couple months ago. And if you are happy with your broker, great. Maybe you could be even more happy with edgeclear.com. I'd love your support. We're spending a lot of resources on building Edge Pro X and software that is competitive and is designed for the individual active online trader in futures. And again, I'd appreciate your support. I don't do that often, but I want to make sure you knew what EdgeClear is. It is a brokerage. Here we are. So what are we expecting for today? So again, the lines in the sand, there, right? And then we have, so this is the 00, this is the 96 area. And then if we get through there and push to the other side, then we're looking at 85. So I'm just drawing a map of the key milestones, 85. Okay. And then if we get below there, then we're looking at 75. And this is not intended for it to be every 10 points. 75. Then we have 65. Again, I didn't plan it this way, but this is how the numbers worked out. And then beneath there is 55, the MC point of control from the beginning of April, 55. These are the areas below. Above us, we're looking at 1550. 1550 is oh, what's going on here? 1550 is the next area up that is important. Once we breach that, then we're looking into the 25 area, then 30, 32, 38. That's what's above us. There's quite a bit above us, but once we breach the 1550, we're likely to run up relatively easily. So this is kind of the scale or the map that we're working with. And this morning, what are we looking for? We're looking for this to open and immediately push the overnight high at 42.10 quarter, consolidate sideways. We would be out of range of yesterday, in range of balance, and then at some point I'm looking for it to come back to the 04, the 200, consolidate, put in a base, look for icebergs to buy, and then to push up above the 1550. Once we're above the 1550, forget the shorts. It's likely to go to 25 again and then challenge this 30. And that's what I'm expecting today. So I'm looking for it to push into 30 on the high side. So that's the map for today. If the rejection of yesterday, if the auction that took place yesterday holds true. If it does not, then we are likely to push the high very quickly towards the 1500, the 15 even, 1550, consolidate, and then come back into the 200, and then we see failure into 96. And if the 96 doesn't hold, then we're looking for 85 beneath there. We still get our higher high, higher low. So the daily time frame is still intact or is being reestablished on the trend upside. But we're still kind of fighting this big balance zone. Good luck today. Hopefully you've gained something this week. I've shared a lot. I've talked a lot this week because we're getting some really interesting action. But I'm hoping you're understanding the auction and you're able to come up with your own plan to for your day. And in that way, you have strong support for your trades. That's the whole idea. We can all click a mouse and we could all find a trading plan online. The question is, are you holding on to your winners? Are you cutting your losers short? Are you sticking to your risk plan? Are you executing well? That's what matters, and understanding the narrative will help that. Good luck.